This video is a simple one, but the most important one of all. We're going to go over all of your major market catalysts for this week, any and all economic data that will come out that will move your portfolios, that will move something like a Tesla. We're also going to get into what I expect from Tesla stock this week, aka my price prediction. By the end of the week, where do I think Tesla will go? Up, down, sideways? We'll provide a thesis. A technical breakdown. We'll look at the option positioning for this week as well. And on top of that, discuss where we are with the markets. What actually happened last week is kind of a head scratcher because you've seen a massive amount of outflows to the IWM when look at what happened to that sucker on Friday. It was up over 2.5%. Seems like you would have seen a big inflow. This could actually be very bullish for Tesla, for interest rate sensitive companies. We'll break it all down and much more here in this video. We do have some earnings as well this week. A jam-packed video for all Tesla stock investors. Do me a quick favor if you have not done so already. It's free 99. It costs you nothing to do. It's cheaper than breathing these days. Hitting that like button and subscribing to the channel, that is, only if you want to help push this video to as many people as possible so they can be informed, educated, and hopefully prepared to make some money this week, because that's ultimately what it's about. Enough rambling, let's go ahead and get started. First thing we will look at is the option activity in Tesla for last week, and we will also look at the forward positioning, meaning what are market participants expecting for Tesla stock this week. And then we'll go over a price prediction later on throughout this video. But I want to give you guys an overall gauge of sentiment, how the markets feel about Tesla right now. I think that's very valuable to know. And options are probably the best way to gauge sentiment. If people are bullish, there's going to be a lot of bullish orders. If people are bearish, there's going to be a lot of bearish orders and bearish positioning. Over the past week, you had 5,267 hedge fund institutional option trades in Tesla stock worth $10.17 billion. That's a strong week. That's a lot of dollars going into Tesla options. You had a positive order value of 60%. Now, positive order value can be hedge funds or institutions buying calls or selling puts. Those are both bullishly positioned. Bearishly positioned trades would be selling calls or buying puts. So overall, you were pretty bullish last week. For the week ahead, I like to look at the bubble chart. It gives you a real visual of where the activity is with Tesla. Now, you will see the higher the bubbles here is the more open interest, the more contracts that are held on any given strike. The 250 call has the most open interest at 19,647. And then you have the 260 call with open interest of 17,000. It's also worth noting on Friday, the 260 call had 35,000 for volume, and the 250 call had 43,000 for volume on Friday as well. You do have this, which is strange, a $100 put with open interest of 22,497. Obviously, I don't think Tesla is going anywhere close to $100 by this week. But it could be a lot of old options that are expiring, or some hedge funds or institutions that took on very short-term trades. A $100 put's going to be a very cheap option. Maybe they're trying to flip that or something. Doesn't mean a whole lot. But there is a lot of open interest at that $100 put expiring this week. Something else that is also important, in my personal opinion, is looking at the puts-call ratio of open interest. Basically, is there more calls or more puts on this week's expiration? A number over 1 means there's more puts. A number under 1 means there's more calls. You are at 0.86. So there's more calls this week than there are puts, but not by a huge amount. If you were at, let's say, 0.5, that means there would be 2 calls for every 1 put. You're at like 1.5 calls for every 1 put. So a very healthy number, but not super good at the same time. Put to call ratio volume. This is pretty important as well. What we seen on Friday was a put to call ratio volume-wise of 0.77. So that was better than the open interest number. That means there was more people taking bullish positions on Friday than bearish positions. So overall, just abstractly looking at these numbers, it looks like hedge funds and institutions believe Tesla could rally as high as 260 in this upcoming week. That would be quite a decent move higher. That would actually be an 8.76% move higher from here, so almost 9% for this week, which is definitely in the realm of possibilities for Tesla. And I think you guys are going to like what we have to say about the charts and where I think Tesla stock is ultimately going this week, but we do need to talk about the broader markets because data, earnings, other catalyst, market sentiment in general can also affect Tesla stock and does affect Tesla stock on a day-by-day or week-by-week basis. And just when you thought earnings were over, indeed they are not. So just some notable names here. Monday and after hours, you have GitLab and Joanne. Tuesday pre-market, you have NEO, AutoZone, the JM Smucker company. Tuesday after hours, MongoDB, Centennial One, Toll Brothers, Dave & Buster's, Asana, Stitch Fix, and Box. Wednesday pre-market, you have Ollie's, Campbell's, pretty much it. Wednesday after hours, you have C3 AI, GameStop, Chewy, Viva, ChargePoint. That's pretty much it. Sportsman. Some people know that company. Not a lot of people know that company, actually. Thursday, pre-market, you have Dollar General. That's one I personally invest in, so interested to see what those numbers look like. That'll tell you a lot about the consumer as well, so you definitely want to pay attention to Dollar General earnings. That could actually move the markets. That's one that could be important. Thursday, after hours, Broadcom, chip company, has done very well over the past year. That could also move the markets. Lululemon, DocuSign, Restoration Hardware. Restoration Hardware is going to be important as well. Last earnings, I killed it. Or we killed it, I should say, in the trading community on Restoration Hardware. If you guys want to come trade with us, maybe trade some of these earnings, maybe trade a little bit of Tesla stock this week, well, check out that link down below in the description of this video. And again, congratulations to the members in the trading community. It's been a great last couple of weeks. Overall, not a huge week for earnings, but some of these could be important, like Dollar General and Broadcom, that could have a larger effect on the broader markets. Now to the economic data. The data we get this week will be very important. We have big data coming out, but the biggest data report is going to be on Friday. So that makes it a little bit more interesting because the markets are going to be looking forward to and looking ahead towards that Friday data report, in which we'll talk about here in just a moment. So you can get movement this week based on economic data, some of these other data reports, but Friday's going to be the big one. Now, on Monday, you're not going to have much. Some secondary data, some inflation data out of Japan, that could be important. Some 3-6 month bond auctions, not expecting a whole lot. You do have factory orders month over month coming out for the US at 10 o'clock in the morning. You're expecting negative 2.6%. Last month's reading was positive 2.8%. So that would show quite a decline in the economy. That's important to watch. Remember, right now, there's two reasons why the Fed cuts rates, and the markets are expecting 5 to 6 rate cuts in 2024. One of them is inflation comes down faster than expected and just continues to trend lower. The economy does fine. In that case, there's no reason to have 5.5% interest rates if inflation is 2.5 or 3%. Second reason is inflation comes down, maybe it trades sideways or goes higher, who knows, but the economy takes a turn for the worst. Then you get rate cuts as well. One of them is bullish, one of them is bearish. Obviously, if you can't tell, the bearish one is the economy going down the poop chute. The bullish one is the economy holding up and inflation falling. So you definitely want to watch the economic data here. It's going to be very important. Coming on Tuesday, this is going to be some important data as well. ISM Services PMI, you're expecting that at 52. Last month's number was 51.8. So you're expecting services to ramp up a little bit. That comes out at 10 o'clock in the morning. JOLTS job openings are expected at 9.35 million. This is for the month of October, so quite delayed here. But the lower, the better. Now, we were under 9 million for a while. If we do get, lower, maybe we come in the 8 million range. That's just showing that maybe the labor market is not as strong as maybe we previously thought. So definitely seeing that come down more than expectations could be a good thing. On Wednesday, again, some secondary data like exports and imports, non-farm productivity, final numbers for Q3, some data out of Canada, some mortgage data, some oil data. Nothing that's going to be huge that is going to move the markets big. On Thursday, same story. Total vehicle sales, used car prices, some data that could be important indicators of inflation, a lot of data out of Japan, consumer credit change for October that comes out at 3 p.m., Challenger job cuts. You're expecting 40,000. That's probably going to be the biggest data that comes out Thursday. That comes out at 7:30 in the morning. But overall, again, Thursday, not a huge day. Friday, different story. You have non-farm payrolls for November. You're expecting 180,000. I'll tell you right now, historical average is around 160,000 job ads. So 180,000, that's a little above trend, but that's way lower than where we were before. So 180,000, I think that's okay. 150,000, that would be okay as well. That's the number we had last month. 100,000 or less is when you get into a situation where the dynamic might change in the markets that says, are we heading into a recession or what? That could be a problem. So you want to see it come in over 100,000, but under 200,000, really under 180,000. So that's going to be interesting. Unemployment rate expected to remain the same at 3.9%. Same here. If we get above 4%, that might start to be seen as a problem. So definitely want to watch that. A lot of secondary data in regards to the non-farm payrolls and the unemployment rate. But these two big numbers are going to be the most important ones. You are also going to get the Michigan Consumer Sentiment Survey for December. You're expecting 61.8. This would be an improvement from 61.3. But the biggest thing to watch is 5-year and 1-year inflation expectations. 5-year inflation expectations last month were 3.2%. You're expecting 3.3%. That would be bad news. 5-year inflation expectations are hitting the highest levels they have been in the last 15 years. When inflation is at the lowest level it's been in the last 2 years. That doesn't make a whole lot of sense. And at some point, this might be worrisome to the markets. 1-year inflation expectations are expected at 4.5%. That would be the same as last month. Last month came in at 4.5%. So your 5-year inflation expectations are the most important. You are expecting that to tick up a little bit. Overall, I'm expecting probably slightly weaker data than expected. Maybe 160,000 job ads, maybe 140,000 job ads, but nothing super low where it's bearish. Probably bullish in the market's perspective. That's probably going to be seen as good news if we come in at like 140,000 jobs. Unemployment rate, I'm expecting that around 4%. So maybe an uptick slightly. Wouldn't be surprised if you trend downwards a little bit. Overall, I'm expecting the data is probably going to give the markets a bullish reaction this week. But again, our big data is on Friday, so markets are really going to be holding back some of your big movement until Friday. So it doesn't matter if the markets rally for the, Monday, Tuesday, Wednesday, Thursday. It could all come raining down coming on Friday. Vice versa. If stocks trade sideways or sell off heading into Friday, Friday could be a game changer and be a 2 to 3% positive day, depending on how the data does come out. So don't be fooled. It really doesn't matter what happens until Friday. According to Tom Lee over at Fundstrat, he is the one analyst that hit this whole last year on the head. He was the one that was saying, buy tech stocks, buy Meta at $80, buy Tesla at $100. Just stupidly, ridiculously good calls he made over the past year. He's been very, very correct on when to buy, when to sell, when to kind of hold out. He's been pounding the table to buy stocks for a while now. This is the latest chart they just put out. It looks like a 5th grader wrote it. But long story short, No, the November jobs report is this upcoming Friday. That is December 8th. He thinks the markets could hit a temporary bottom right before that report. So that would be implying maybe a little bit of weakness at some points this week. Then you're going to get the November CPI on December 12th. That's going to be the following week on Tuesday. And then on Wednesday, not this week, this upcoming week, but next week on Wednesday, you're going to get the Fed. And then they're expecting a FOMO-like rally. So that would be implying a good jobs report this upcoming Friday, a good CPI report the following Tuesday, and a bullish Fed the following Wednesday. If that happens, they think the S&P could FOMO rally into a Santa Claus rally all the way to 4,800. The SPY is at about 4,590, so right at about 4,600. So if Tom Lee is correct, a Santa Claus rally could push the S&P up about 5%. That would be new all-time highs. Now, I do want you guys to be a little bit careful with this narrative because what controls the S&P, the NASDAQ, the Dow, but really the S&P and the NASDAQ are your big tech names, right? They have like a 50% weighting in the NASDAQ, like a 35% weighting in the S&P. If those names do not do well, the index is probably not going to do well. If those names do really well, the index is going to do well. You got to remember this. In 2024, big tech is not going to benefit from rates going lower, nearly to the same degree as small, mid-cap companies and interest rate sensitive companies. Tesla is considered a big tech name, but it's unique. It's hurt by interest rates, going higher, and it's helped by interest rates going lower. So Tesla might actually well outperform the S&P and the NASDAQ, even on bad days for the S&P and the NASDAQ. Because if you're wanting safety, if you're wanting a high quality name, if you're wanting a stock that is going to benefit from rates going lower, I can't find a better example than Tesla. I can't find a better place to put my money. Considering Tesla's still down about 50%, 45% or so from all-time highs, I think Tesla is going to become more and more attractive as the weeks go on. Same is true with interest rate sensitive, high quality, small and mid cap stocks. That's where I want to be positioning my portfolio. That's where I have been positioning my portfolio for a long time now. What you might find interesting also, this is from the Short Bear. He says, while we consolidated over the past week, the IWM saw its biggest outflow in 2 years. He says, I will never understand why investors do certain things. Add for 2 years within a downtrend, cut once it gets constructive. Basically saying people were buying small and mid-cap stocks for 2 years while things looked worse and worse as the Fed was raising rates over and over again. And now it looks like we're getting 5 or 6 rate cuts in 2024 currently. And it looks like Powell on Friday confirmed that's okay by saying, not saying it was not going to happen. Hopefully that makes sense to you. And now people want to sell the IWM, sell small and mid-cap stocks. That just doesn't make any sense. The weekly flow to the IWM was an outflow of $2.21 billion. So some people in the marketplace said, hey, we got a rally out of small and mid-cap stocks. Maybe it's time to take some money out. This was the largest outflow that you have seen on a week-by-week basis for IWM, for small cap, mid-cap stocks, since October of 2021, when you got that first initial rollover in the IWM. That is, that's bullish in my opinion, because people are going to realize rates are coming down. We want to be in high quality, small, mid-cap stocks. Stocks that will benefit from interest rates going lower. IWM small cap stocks are trading at historically low multiples. They've never been this cheap besides the bottom during the great financial crisis and the very short-term bottom we've seen during the Rona crash. You've never had a chance to buy these stocks this cheap before. interest rate sensitive companies in general, right? Even a Tesla has never been this cheap before, literally ever. And you have a chance to buy these stocks now. But yet, people are holding off. This is bullish because they will realize that, oh crap, we shouldn't be selling, we should be buying these very cheap stocks. So I find this interesting. And, to the contrary, the last thing you would want to see is massive inflows, because that would say, hey, maybe people are getting way too ahead of themselves. It's quite the opposite here. People are still doubting. That means potentially more gains for you if you own some of these stocks, if you own a Tesla. If we take a look at Tesla on Friday, Tesla was down about 0.5%. You were up almost 0.25% in after hours. So all in all, you were down about 0.25%, doing some rough, simple math here on Friday. This was the day after the Cybertruck delivery event. I think this is bullish, right? You have to buy the rumor, sell the news narrative. That happens with all companies every single time. Now, if it's really not exciting, if there's maybe bad news or expectations were maybe not met, you get a really bad reaction to an event. Apple, Nvidia, Microsoft, Google, Tesla, all of these big, followed, well-known companies, they all do this. Very, very rarely do you see a stock actually do well after an event. Now, I figured the day after the Cybertruck delivery event, you might fall, you might go up. I thought there was a decent chance the stock would actually rally aggressively after because expectations were low. Pricing expectations specifically were low. A lot of bulls were expecting 50,000 for the Cybertruck. I was expecting around 60 to 65,000. It came in high at 61,000 for the lowest end variant. I thought that would be seen as good news. And I think it was seen as good news. But you still had some of that buy the rumor, sell the news narrative around last week's event. With that being said, the good thing is, as long as it's not bad or expectations were not upset, in this case, I think Tesla exceeded everyone's expectations. Buy the rumor, sell the news. The sell-off doesn't last long, especially if it's a good event, if it was positive. So I think this week, kind of what you seen on Friday, the 50 cent, 52 cent recovery in after hours we seen with Tesla stock. I think this week you probably get the bullish reaction in Tesla stock based on the Cybertruck delivery event. You probably get more analyst commentary, you probably get more opinions, and it's hard to be bearish on the Cybertruck at this point. The only bearish thing you could say is it doesn't have as much range as we thought. But what did you really expect? Did you really expect a 500-mile vehicle range? No. With the extension, you get 470 miles. That's good enough. Close enough to 500 miles. So I do think you get a positive reaction this week. Now, if you get above the 100-day moving average, then you could rally to about 260 pretty easily, maybe as high as 270. But you have that economic data on Friday. So that's where it's really tough. I think in the kind of midpoint of this week, if the data coming out Tuesday is good with JOLT job openings, that data is good, Tesla stock could easily break into the 260s, maybe 265 in that range. If you get above 260 and you start to run into 270, that's where you start to potentially make a move to around 300, if not higher than that. So I personally think Tesla stock's probably going to about 260 or higher, kind of in line with what we see with the option activity. Would it surprise me if we trade sideways and we end this week in the 230s or 240s? No, this is not a recommendation. This is not financial advice. But I think you hold the 50-day moving average at the bare minimum. That is basically $235, $234.83. And I think odds are good that you're over 260. Should you trade based on that? Absolutely not. Am I going to? Maybe. The RSI is at 54.13. Does support maybe an upside rally to come? You're pretty neutral. So it's really not saying a lot, but you're far from overbought. Considering you went from 194 to 240, I would say that's good. The MACD is pretty dang bullish as well. Positive, nice gap here, kind of trading sideways now. I think you could be due for a continued run in the MACD. So we'll see. Let me know what you guys think down below in the comment section. Hit the like button and subscribe to the channel if you guys made it to the end of this video. If you guys want to come trade with us live in real time, I send out my alerts every time I make a trade. Whether it's a winner, loser, does nothing, I always send out alerts. So if you guys want to come talk to us, come trade with us, come learn, come grow, link down below in the description of this video. My name is Michael Tyler. Enjoy the rest of your day, and I will see you in the next one.